Welcome back, everyone. And we have some very exciting news to dive into before the market opens tomorrow. SoFi is crashing, investors are terrified, and the valuation has essentially been cut in half from $32 back at its all-time highs down to now $15. I mean, that is a crazy discount, or is it just a company that's going to crap? So we're going to discuss that today, look at the evidence and seeing what is the trajectory of the company and what is actually happening behind the scenes. So with that being said, if you haven't already, make sure to subscribe to the channel. It'd mean the absolute world to me so we can grow our following and obviously help more people like you guys stay up to date on the market. So let's go ahead and see what is actually going on with SoFi stock and why it's actually being basically cut in half in the past couple of months. So definitely some good exciting news before we jump into the scary valuation and all that stuff is SoFi is doing some great marketing techniques. And as you can see here by the rankings on the App Store, they're one of the most ranked ever on the App Store recently because of a partnership they did with Graham Steffens on the YouTube channel. And they were able to partner, kind of create a link, people to go download SoFi, and it worked. A lot of traffic going to SoFi, which is good. SoFi is using a bunch of these different marketing techniques to grab new market share at a pretty cost-effective way, which is really good. One thing about this campaign as well is they're now offering $400 to every new member to join the SoFi platform, which is quite high considering last year at this time, I think it was around $250. So they've brought it up quite a bit to acquire a new customer because they know if someone joins in the ecosystem and starts using products, gets insurance through them, investment products as well, there's a higher likelihood of LTV, of lifetime value to that customer. And they're doing a great job doing that. Okay, here is SoFi's EPS, which is basically right at 25, which has dropped significantly, as you can see all the way up here from 100 and almost 30, 125 EPS. And this is happening while there's great growth in the company, great projections. The CEO is fantastic. Everything is headed in a great direction. So it makes you wonder what is actually going on in this company when stuff isn't going well in the market, And so this is the actual tangible book value. Now, the way to think about this is SoFi had to raise a lot of money to get here, but this equals the TBV per share, essentially. You can see it has gone up over time, up near 662 of Q4 of 2025. And so that is decent. But if we look at the guidance here, so this is the financial year 2026, and this is Q1 of 2026, the guidance report. So the 2025 actual was 3,591 net revenue. And you can see here they're expecting around a 30% year-over-year growth, which is great. EBITDA, we're expecting a 52% growth in Q1 of 2026. Net income, a great, fantastic growth of 72% on the net income range, which is great. That means their marketing is really working and their back-end product is doing great at retaining those customers. Diluted EPS, 54%. Adjusted net revenues, 35% year-over-year growth. And the net income, implied net income margin of 125%. So this becomes the real question. When a stock essentially gets cut in half completely, we have to figure out, is it something wrong with the company or is it something wrong with the overall sentiment of this stock? And I think we're seeing a lot of that. We're past the Muddy Waters reports where, they were claiming a lot of things and there might be a lawsuit with that. If you haven't seen that news, go check out one of my past videos on SoFi, but that's past. And as you can see from the numbers, I like to look at the fundamentals of the company, see where things are actually going. So this makes me wonder, is it a good time to buy more SoFi? And if we look at the chart here, so back at its all-time high, SoFi was around 32.50. As you can see, almost touching 33 there with the top wick of the candle. But man, it's been getting hammered, like destroyed. Last year at around this time, if we look back at April here, 2025, the stock was on $13. So it essentially is coming all the way back down to potentially that support range in the between $13 to $16 range. But the question is why? Because ever since this company became public, it has exceeded, not just hit earnings, but exceeded it every single time. And we've seen that here, like it's doing great. So this is the main reason why I'm currently buying lots and lots of SoFi. And so is their CEO, which indicates a great signal. He's confident in the actual company, the direction of it, where it's going. It's important when we have a CEO backing the product. He's being very public with his drive to push the company to be better, and the reporting is is showing that as well. If we look at the reports here in the statements, so we want to look at what the statements were for Q4 of 2025. So we had a $50.6 billion total assets, total liabilities around $40 billion. So definitely quite a few liabilities, but they are growing very, very fast. So that is more expected. So total equity around 11 billion, just about 10.5 billion. If we go to cash flow here, it is negative a little bit, but you would expect that with the company that is reinvesting so much money into a growth company. Remember that SoFi is trying to get into the S&P 500. They're trying to hit that. And we saw a few of those companies entering the S&P 500 before them, and that started a downward spiral within the stock. As soon as it hits on an upward trend, I think the stock is really going to rebound nicely. And a lot of the Wall Street estimates have seen that the stock's still estimated to be around $24 to $28 range this year. And so it's not like analysts have changed their valuation a ton. Some of the valuations on the company are much higher, like in the high 30s range. I think that is great. And I think that's definitely a possibility. But mid 20s as a support level is very, very expected. So if you buy in some shares now at $15 and it goes up to $30, or even like 27, 28 by the end of the year, you're nearly doubling your money. That's fantastic. Once we see this go into the S&P, that's especially when I think that'll happen. But Q4 of 2025, so total revenue was 1.3 billion, up about 32%. We had operating income as 204 million. And then let's look at the net income before discontinued operations. They had 481 million here. Earnings per share 0.41, and then EBITDA here. So those 970 million. So great financials. I mean, again, like there's no massive, huge complaints here with SoFi. With a lot of fear coming up to this earnings, like we looked at, they're most likely not just going to hit earnings, but they're going to exceed earnings. So it makes me wonder, where is the actual support level going to form? And I think it's going to be around the $20 to $24 range for a little bit, and then it's going to spike up. So we could very well see that with this position settling down in the support range, as you can see here, around the $13 to $15, and then it start to compile up. Another thing to consider with SoFi is what's happening with the interest rate cuts. Now, SoFi highly depends on interest rate cuts for its business because it's obviously a fintech institution. So now that there's a war in Iran, there's little bit of worse jobs reports coming out and inflation peaking a little bit higher than we were expecting. That's not good for SoFi because that means we might not actually hit a rate cut over the next few months like they were expecting. So that is definitely going to hurt the stock a little bit. And I think there's a higher likelihood that, yeah, we do touch down and sit at the $13 to $15 support level. And then we slowly go back up to 24, 25, 26. And then maybe we get into the S&P 500 and then things really, really do get. That's my prediction for the stock. But I've been dollar cost averaging in SoFi for the past year and it's done fantastic. I've taken a lot of profits as well, always trimming profits. Same thing with Palantir as well, trimming profits, reinvesting in different companies. And then when it dips like this, just reinvesting as much as possible. And that's really what it's about. Don't let this shake you out of your positions. We just looked through the financials. It is a great company. And it's more towards the lower Bollinger Band as well. So if you're looking to swing trade this stock this week, definitely a great time. Look at those 4-hour charts, look for the fair value gaps, jump into SoFi and make some money. But let me know down in the comments what you guys think of the actual company and what you thought of this video, where you think the company is actually going over the next few months, especially near earnings, which is going to be May 26th. So it's coming up pretty shortly. But with that being said, make sure to subscribe if you haven't already, and we will see you guys on the next video. Peace out.